Welcome to Monopoly Season 4, Episode 1. Today we're going to talk about emerging property markets in Australia. And today we have Larissa from Bridge Projects Group. Welcome to Monopoly.
Oh, thank you, Nav. And I'm really excited to be here and on the podcast.
Thanks for coming in. Before we start, have you played Monopoly as a kid?
I have, many times. I still play it.
Awesome. That's why you're here.
Yeah.
And that was the brainchild behind the name Monopoly. And we all love Monopoly and we still do. There's a lot of lessons which we can take on for what we do right now. So
It's a really good board game. And it's funny, it hasn't actually gone out of trend over the years. They've sort of got different twists on the original version, but it's still the ethos of sort of growing a property portfolio, and the lessons in it are really vital, I think, to a lot of people in the world.
Definitely. Any tricks of the trade while you're playing the game?
Buy them all as soon as you can.
Which is relevant too.
Yeah.
Right?
Well, it is really true, isn't it? If you get in early, you usually do quite well in the property scene as well. So, look, that's my strategy, my secret sauce to when I'm playing and in life in general.
That's right. All right, so we're talking about emerging markets. First discussion point is, let's talk about each segment of Australia. So starting from Perth to Brisbane to Adelaide to Sydney, Melbourne, to see what these markets are doing right now in terms of economic growth, infrastructure growth, population growth, and so forth. Start with Perth from right on the Western corridor.
Yeah.
What are your thoughts on Perth right now?
See, I've loved Perth for probably over 5-6 years. So pre the boom, I've always been very pro-West, so going west for investment. Generally speaking, before COVID, it was sort of seen as a boom or bust kind of state for investment. So there'd be the rise of certain mining booms, and then people would actually invest into small towns near mining districts, and they'd have this huge growth. But then as soon as maybe that mining segment had died down, they wouldn't experience that anymore. So there was a bit of sentiment pre-COVID, I'll sort of say, around that point, where people they didn't have Perth on the radar for investment. Now, in the past 6 years, so I actually visited there, and I always go there sort of checking out different builder partners and different developments, and it's a beautiful place to be. The beaches are amazing, not like the rest of Australia. I feel like they have proper beaches there. No offense, the East Coast. But the infrastructure that's gone into the CBD and the surrounding areas has been immense over the past 5 years. So it's got a lot of key infrastructure that has been built into the city over the past 5 years. The professional services industry has grown. So there's a lot more great professional services. So lawyers, architects, accountants, and everything is getting bolstered to being a big city. The other noteworthy thing as well with Perth is it had during COVID what I call like this bubble. Yeah. So it was so resilient during that period and unaffected. Yeah. Now, when we talk about resilience, there's a couple of things that I saw kind of come out of that. One, obviously the economy was uninterrupted. Yeah. I think there was one day that it shut down and I was actually over there. So I experienced probably the short shutdown over in Perth. But when it's uninterrupted, business is nearly as usual. So they had a really good, strong economy, or relatively strong. Obviously, the fluctuations of it with the rest of the world do come into play, but it was relatively unscathed. So they have a strong economy from that. And what that actually did is a lot of expats that were struggling overseas moved back into Perth. Yeah. And they actually moved back permanently. Yeah. So imagine all these people going, well, Perth, my hometown, is unaffected. I love Perth. Let's move back. That was always the plan. Yeah. Why not? They didn't want to rent, so they just ended up buying a lot of people. And then we also saw as well overseas markets in particular, the kind of more Asian sort of investor and person actually seeing it as a safe haven. So unaffected to the virus and fairly safe. So we saw a bit of an influx to Perth from over there. So it's really, really interesting. I think when we look at Perth today and the drivers, it is a really strong area. You could just have to open up the AFR and see how well Perth is doing. Key economists and key banks obviously indicating that the growth is going to continue for the next few years as well. So that's my kind of, I guess, 2 cents on Perth. It's that there is obviously different factors with Perth. I think the being a mining and resource state, it's got a really strong population, what we would call it. So their wage is a lot higher as well. It's one of, I believe, the highest in the world.
Yes.
But yeah, it's got so many great points about Perth. So I've been following it, like I said, pre the boom. And it's really exciting to see it come to this beautiful point where it's getting on the map internationally for investors as well as locally.
Yeah, you're right. I mean, to add on to that, Perth, if you look at the supply and demand, for that gap to be bridged, I think it'll take at least 5 to 6 years. And the best example is you go to realestate.com, anything you see yesterday will be on offer today. It's just unbelievable. Same with the lands. If one of our clients want to buy something, they got to wait for at least a couple of weeks to find a land. It's so scarce, and the demand is so much in Perth, and I think that's going to drive. And if you look at the population growth, that's the highest in Perth across Australia. It's about 2.3% per annum, which is like a 1% more than the norm.
They're experiencing that. Like I mentioned, there's just so much spotlight on Perth for the reasons that I just mentioned, from not just a local lens, but internationally as well.
Yeah. And there's no other place in Australia where you can buy something for 600,000, rent it out for over 600 a week. That's just a dream in Melbourne right now.
Yeah, and I think when I looked at the recent vacancy rates, which is unheard of, it's at 0.5, which I think at one point it did get down to 0.2 if I remember.
Yeah, it did.
But anything that's kind of under that sort of 1%, it's an immense pressure for people to find rental, which means, of course, when there is lesser supply, the demand obviously for those properties pushes the price for rentals upwards. So I think might even experience a bit more of those rental prices going up as well.
Yeah, for sure.
I don't think this is the end. We have a huge housing crisis nationally.
Yeah.
So I do kind of see that that's a fairly strong state at the moment.
Yeah. And also in terms of migrants, when they come into Perth, they're not going to go anywhere else. Unlike someone coming to Adelaide and moving to Melbourne or Brisbane or vice versa, which is a few hours away. Perth is like another country from where we are.
Yeah.
And once someone go there, they're not going to go anywhere else.
Well, and going back to what I said, there's such a huge shift with the professional services there that generally speaking, like from an overseas lens, in the past, and my personal experience has been people have been like, look, I'll go to Melbourne, I'll go to Sydney because they have the best universities, the best workforce. That's now all changing because Perth is, and other states as well have caught up, and they have some beautiful infrastructure, world-class infrastructure, I'd nearly say, because it's brand new, and great jobs and great economy to match.
Yeah.
Yeah.
Talking about Brisbane, when Olympics was announced a couple of years ago and it went on a big ride, what are your thoughts on the current market in Brisbane as well as on to the next couple of years?
Yeah, so Brisbane's a really interesting one. So if we just talk about the Sydney Olympics, so that was, I believe, in the early 2000s, 2000, 2001 from memory.
2000, I think.
Yeah, 2000, wasn't it? Yeah. So from the announcement to when the games happened, even to the year after, I believe the figures were that property prices grew 60 to 80%, which is crazy. So I feel like if we're going off past trends, that Brisbane may experience something similar, which is exciting. So from that announcement, once again, you just have to open the newspapers to see that essentially it's on everyone's lips. Everyone wants to get into the market. and experience and ride the wave of that potential capital growth as well, which we've already seen since the announcement.
Yeah, which we've already seen. And the Google searches have gone up since the announcement of Brisbane, which was not so popular, but now it's becoming popular. But once you go to Brisbane, you'll see the infrastructure projects which is going on, and because especially it's between Brisbane, Gold Coast, Sunshine Coast. So obviously all those three areas will be interconnected. Infrastructure developments are going in. So that's definitely not a bad place to go.
One person once mentioned to me Brisbane and sort of Queensland's the sort of place where it's obviously a holiday destination in previous years, but now the sort of motto is come for a holiday and stay for a lifetime because it's that good. And I think essentially the infrastructure, like you said, and the city, for example, in Brisbane is just a bustling mini Melbourne. That's how I describe Brisbane. It's got beautiful restaurants, nightlife, key infrastructure, easy to navigate. It's sort of got your South Bank as well, which is beautiful and so iconic, I think, to the city. And you have even that huge sea bus project, which is just about to, I believe it's complete now from memory, which is going to be another key flagship project for the area. So it's just growing and growing. When we talk about Brisbane, it's very interesting because, like we mentioned before, the price point has jumped so much since that announcement. And the games aren't for a while. So I'll be really interested. I don't have a crystal ball, but I'll be really interested to see where that ends up when we do get about a year or 6 months out from the games. It doesn't seem like people are taking their foot off the pedal. Even though to kind of get into the market, what we're kind of seeing is a lot of people, investors in particularly, what I'm finding as a trend is they're loving duplex product. Now, speaking to different land developers and people in the industry, I now sort of understand that getting these blocks is becoming extremely hard because everyone's having the same thought. Let's get into the market. Let's earn double the income. But once again, land availability for these larger blocks is very, very difficult to find. You are very similar to Perth. You're on a wait list for those larger blocks. And people just want to get into the market. They're putting either their equity out of their home or their self-managed super funds, and they're wanting to get into the market because there's such a big hype around these Olympics. And if it's anything like the Sydney, I think that everyone that gets into the market now, or even when they can in the next 6 to 12 months, will experience that growth.
For sure. More. For sure. And it's the same in Brisbane too. The rental crisis is still going on. It's to rent out properties is very easy. And as you rightly said, the capital growth will continue.
I think as well. So just on the vacancy rate, once again, 0.5% at the moment. So on par with Perth. I think all the data that I'm quoting as well, I believe it's CoreLogic's latest report in March. So it'd be interesting to see, I guess, the future for that state or for that city, I should say. There's different markets. Obviously, you have the north side and the south side. It's very interesting. I think both are doing quite well at the moment.
Let's talk about Sydney and Melbourne together. We're right next to each other. It's interesting time in Sydney and Melbourne. Adelaide, Perth, and Brisbane were riding for the last 18 months or so. What are your thoughts on Melbourne and Sydney?
From an investment perspective, I generally find a lot of investors tend to cross Sydney off the list. Now, it's nothing to do with anything other than the price point is very, very high. And generally speaking, look, I love Sydney. I think it's such a great area. Capital of Australia, got the Sydney Harbour Bridge. It's a very iconic tourist destination. When people come to visit Australia, where do they go? Sydney. Like it is so iconic. So I think in terms of the market there, it's had a bit of a tough patch. Melbourne and Sydney have from COVID. I think anywhere that was a big city and had a dense population really did struggle across the globe. But when you look at those two cities compared to the rest of the world, they're still doing relatively well in terms of the economy. So when you do that comparison between Australia, yes, they are behind, I guess, the other states technically, but on a global scale, they're still performing really well. So, Sydney, generally speaking, a lot of investors can't afford the right price point of over $1 million to get into the market for like a sort of house. However, on the flip side, I think Melbourne's a really interesting one.
Yeah.
Melbourne, and look, obviously I'm biased because I live in Melbourne, but Melbourne's population will surpass Sydney's and become the largest state in Australia in due course. And I think the figures actually that recently got updated, I won't quote them, but I do understand that the timeline has sort of been pulled forward because there's a huge population coming into Melbourne. Now, Melbourne technically is what we call at the bottom of the property clock cycle. So it's just had a bit of a recession. Things have gone back. We've had COVID. We're the most lockdown city in the world, like the most lockdown city in the world. How crazy is it to say that?
Over 235 days or something like that.
Yeah.
Unbelievable.
But we're still look, we bounced back. And I think that other states where they've sort of actually been able to grow over the past few years, Melbourne's had to play a bit of catch up. And I feel very confident in sort of saying, I think over the next 6 to 12 months, we'll start to see that grow and grow and grow, because investors at the moment, I would call Perth a hot market and Brisbane a hot market. And also Adelaide, I believe, is also in that rising hot market. But what investors should be looking for is warm markets. Yeah. And that's what I call Melbourne at the moment. It's warming up.
Yeah. No, I 100% agree. Melbourne and Sydney are the most popular among all states. And as you rightly said, Sydney is not the favorite of investors purely because of the price point.
Yeah.
You go 1 hour, 10 minutes out of the city, you're still paying $1.2 million. And the best example is people in Sydney. So normally people in a state, they buy in their own state because of the comfort, but it's the other way around in Sydney. Sydney investors want Melbourne or somewhere else because of the price point.
Exactly.
But Melbourne, yes, that's right. Rough patch for the past 18 months, but it'll definitely bounce back because the fundamentals are strong. Rentals are in demand. Rentals are on the rise. Population is coming in. And if you go to the city, you'll see tunnels going in and new railway tracks and airport links coming up. And that's to cater to the population growth, which is going to come in.
Yeah, and I think Melbourne City Council actually did a really great job of bringing people back to the CBD. So they've been running a lot of incentives to people who wanted to run events. So getting, in my opinion, that foot traffic, that environment back into Melbourne post-COVID as well has been crucial to that consumer confidence. Because when we have more people in their everyday lives sort of going through and engaging, I think that it really accelerates that thought around what just happened for the past year and a half that we were locked down, and shows, and obviously the businesses benefit from that foot traffic. So people are spending money and that has a flow-on effect to our wider economy. So good work, Melbourne City Council.
Going back to Adelaide, again, another interesting market. Thoughts on Adelaide?
Adelaide is a really interesting place. So I always tie Adelaide back to the fact that if you can imagine, this is a city surrounded by hills.
Yeah.
So it's landlocked to some degree.
Yeah.
So it's a really interesting area where it's unlike other states, in my opinion. So you have the city and this area around the city where, to be honest, there's blocks of land that are 10 minutes from the CBD still able to be built on and still there.
Yeah.
So where in other states you'll kind of have that urban growth and urban sprawl and things slowly fill out in proximity to the CBD, Adelaide still has opportunities to literally buy a block 10 minutes from the CBD. Don't get me wrong, you still have to obviously pay a higher price point, but it's got a salt and pepper of sort of where you can still buy, build and get growth.
Yeah.
Being landlocked as well, it's going to have a cap around how many houses can actually be built in this period.
Yeah.
It has been so popular in the shortest amount of time. It's caught up to, I guess, the vacancy rate of Perth's being at 0.5 as well.
Correct.
People are struggling to find houses and land, same situation as Perth. So it's a really interesting state. They've also spent a lot of money on infrastructure. Adelaide, funnily enough, is the space capital of Australia. I don't know if you knew that, but it's got a lot of key drivers bringing, once again, overseas migration into the state, very strong universities, and that kind of just paints a picture that I think investors should definitely have that on their radar at the moment. If they can't, I always recommend, look, with Perth, if they can't quite get into the Perth market, as a second kind of recommendation, Adelaide's definitely worth considering. It just depends on what investors are seeking, but generally from a price point, Adelaide's just a notch down. You can still sort of nab something for around your 500 to 550, which is fantastic.
Correct. No, spot on. It's an interesting market, and Adelaide was a city where if you speak to someone locally, they consider 30 minutes far, far away, unlike in Melbourne and Sydney. So they are used to that 10, 15-minute radius where most people live in. But now people are getting used to places like Mount Barker, Munapara, Anglevale, all those suburbs, and people are slowly moving in. So it's probably where Melbourne was 10 years ago, 7 years ago. But I think you're absolutely right. Rental crisis, again, rentals are in demand, very easy to rent out, and you can expect some growth through.
I guess, what's a really exciting new spot? So like I mentioned, recently just started looking into this. So the Murray Bridge area, so obviously situated sort of in between the city of Adelaide and Victoria, obviously regional, but the government's actually putting so much money into that area.
Right.
So what you can expect is they're going to have a bit of a wharf. So imagine what kind of South Bank is in Brisbane. It'll be very similar. So it's on the water, beautiful hub. Obviously, this project's a very big infrastructure project.
Right.
Price points at the moment for that kind of area are starting around your 500 to 550, a little bit under in some areas. So you can snap something up potentially under that, which is amazing. Where else can you do that? And it's all underpinned by the city being revamped. Which is really exciting. So I know from my connections down in Adelaide, a lot of them, like in the property industry, are even now considering this area for their own personal investment needs, because they know what happens if you get in early, just before the infrastructure spending as well. So that's a really interesting area that I'd love to note.
That's you learn something every day. Murray Bridge. That's food for thought, and should do some more research on it.
Yeah, definitely. It's a new area, I think, for people to put on their radar.
Excellent. All right, let's talk about the current trends, which is going on across Australia in all of these states, which can be useful for most investors. What are the trends you're seeing right now with all these markets?
Probably just touching on, I'm seeing for investors that people are really wanting to maximize their income. And what I mean by that is investors, rather than just purchasing a single dwelling, one income, are starting to look at things like co-living. So getting multiple tenants within a home where they have their individual spaces. They're also looking at things like duplexes. So obviously having sort of two detached sort of dwellings on two different titles, and dual occupancy. So once again, one dwelling put together with two separate kind of areas where you can live in independently and rent out. So I'm really seeing they're on everyone's lips at the moment. And if you can sort of double down on your rental income, and there is a housing crisis at the moment, we need more houses, and the vacancy rate is so low, why wouldn't you look at this?
No, absolutely. What I also found was last year, people were in fear of the interest rate rises from 1.5%, 2%. We are now 6.5%. It was a shock for most people. But now people have realized that's what it is. We got to deal with it, and that's probably normal in the whole scheme of things. But what they can control is increase their income, which will help through products like co-living, NDIS, dual key, duplex, where they can have multiple streams of income. That's definitely a trend people are looking at.
Yeah, and I think it's interesting. I think with the rising interest rates, it's seen some, I think, savvy investors come out going, look, well, obviously this is pushing some people away because they can't afford it. I'm going to maximize and get into some new markets, which we kind of saw maybe more last year, not this year. I think this year's a whole different flurry of activity. I don't know if you've seen it from January. I think from the 1st of Jan, I was getting calls around, hey, we need this, we need that. It was like someone turned a tap back on for buyer sentiment and buyer confidence. It was really back in a big way. But I think when we look at the recent announcement with like the RBA and we're not quite hitting the inflation target, we're still on track. But there's obviously it didn't go as well as forecasted. I think people are starting to realize this is just a new normal. So if they do want to grow a portfolio, thinking outside of the box and like you mentioned, dual income properties or using things like their super, drawing equity out of their home, just some of the ways I think that people are navigating the current market challenges, which is obviously higher than normal interest rates. Land availability as well, as we mentioned, Perth and Brisbane, certain pockets is really hard. Recently, I've also heard with the amount of homes that different builders are building, there's a bit of a delay with trade. So delayed build times in the new construction industry, which is just normal. It's always going to go in ebbs and flows about what trades are available. I think at just the moment, it's when people do get their borrowing capacity back, they need to understand as well, I guess, in the current market, you have to move quite quickly. And when I say quite quickly, very quickly. So you nearly have to be so educated when you get that, so that you don't miss out on a property because it's moving so fast. Like within 24, 48 hours, things can sell at the moment if not in lesser time.
Yeah, absolutely.
Yeah.
And also another trend which I saw from people was people used to, if they're in Sydney or Melbourne, they preferred to invest in the same state. But now people are open for other states, especially with land taxes coming in certain states. It has opened their eyes and they're not fearful to look at other products in other states. Have you seen that as well?
Yeah, so definitely and I keep using COVID as a reference point. I don't know if it's a good thing or a bad thing, but it just really bolsters when I think we had these changes. Essentially with Sydney, generally speaking, like you mentioned, a lot of Sydney investors would generally invest in Melbourne. And then a lot of them as well would invest in their own state. What we'd probably see as well from an overseas lens, and what I'd probably see is that generally speaking, the investors over there would only invest in Melbourne and Sydney, and now they're open to other states as well, which is interesting. So I think you're exactly right. I think the whole precedent before has changed. Everyone's quite open to exploring any facet of Australia. They've really opened up their eyes to the strength of other states where in the past it would have just been really kind of your Sydney, Melbourne that people would flag as good places for investment.
Talking about the interstate properties, again, going international is another trend which we might see coming up. Some people are being a little bit adventurous, investing in places like Bali, Thailand, Dubai, where you can get sometimes tax-free, sometimes high income, which you can't even think of in Australia. Have you seen that coming up?
Yeah, it's really interesting. So I can probably talk to the Indonesian sort of property because I've spent the past 6 months doing a bit of due diligence on what is actually there, what is the hype about. It was something that was flagged to me roughly 8 months ago by a couple of different property professionals. And it got me thinking because the first thing that they sort of had said to me is you should consider looking at property in Bali because there's 10 to 15% to 20% returns.
Wow.
And when I first read that, I'm like, no, you're kidding. That's not true. But it actually is a reality for certain projects in certain areas. It's not across the country. Obviously, you need to do your due diligence on this. So anyone listening, I'd definitely say, look, there's a lot of due diligence around area, builders as well.
Yeah.
So making sure, I think that the horror story of builders running away or disappearing or having a terrible faulty build, you need to make sure you have a really good quality partner on that. But the projects that essentially I'm looking at the moment, there's two, and very, very interesting. They're not found anywhere else exactly like with this offering in Indonesia or in Bali. But there's actually, I guess the whole package is that it's a 10 to 15% net return, hands-off investment. So that includes things like obviously all your costs, including your every 5 years a refurb of the apartments, which you can't actually think of anything better to keep the appeal for your investment up.
Yeah.
And it's obviously all pre-considered in this offering. The other thing as well is they've got an 8% interest payment during construction.
Wow.
I haven't heard of that for years. So anyone that I guess for these particular projects, I think you have to obviously find the right partner. Is my advice. But there is offerings over there that are quite strong. The area, funnily enough, after COVID, went through a bit of a really interesting thing happened. So a lot of people bought up land there, and you can build quite fast in Bali. So the whole area from when I visited probably 2 years ago to most recently in March has been changed. It looks completely different. Everything feels like very westernized nearly. Like there's beautiful elements of the Balinese rainforest and traditional culture throughout. So they've maintained the integrity, but there's a lot of infrastructure developments. Especially as well, there's talks about a light rail, and a second airport. So once again, infrastructure going in. But these whole projects, they're really fascinating because, the area is actually going through over-tourism. So the occupancy rate sits around 90% at the moment, give or take about 5%, which is incredible. So when you talk about short stays, anything usually around 70% is usually quite good.
Yeah.
We're talking about around a 90% occupancy rate.
I won't be surprised. If you look at Australians, that's their first point of call for a holiday. So,
well, it actually draws, funnily enough, it's not just the Australian market. So Indonesia is now actually the most I can't remember what source this is from. It actually is an actual data stats before I do say this, but the most Instagrammable country in the world, and people globally come down for this experience of affordable luxury, which is really amazing. So I think we'll start to see the trend of Australians really hopefully joining the rest of the world, because a lot of other countries don't just invest in Australia. They look abroad. And I think when we're talking about the difference of rental yields in Australia sitting around the 5 to 6%, maybe 7 or 8 or 9, depending on if they're co-living and dual income. But that is actually your gross usually. You usually have to consider all your costs and expenses. But when you can go overseas in destinations like Bali and get 10 to 15% net, so after all expenses, I think it will raise some eyebrows. And I'd love to hear your experience as well around other countries that you've seen.
Yes, I mean, we are doing in Dubai. It's similar, not as 10, 15, 20%, but the rental yields are pretty high. You're looking at 8, 9% in Dubai. And the most attractive thing in Dubai is it's tax-free, especially for investors. That's the reason why people in the US, Europe, investing there. I just heard yesterday, Canada, they have raised the capital gains tax to 66%. So that's a new market which you need to tag on to Dubai. So Dubai has, and similar to Dubai is a country where they know how to grab the investors. Things like offering residence visas and things like that. That has driven so much of money into the country, and they know how to run a country. They run it like a business. So I was pretty impressed with how they run it. And I think, again, Dubai was known as a volatile market probably 5 years ago. I really don't think that's going to happen anymore because of what they have put in, what infrastructure is going in right now. So again, rental yield is very, very strong in Dubai.
No, that's interesting. I have sort of seen and heard a few people obviously exploring that at the moment. It's with what's the entry point for prices over there
I would
for?
say about $250,000.
Okay, wow.
Yeah.
That's amazing. I think, yeah, because like probably as well with the Bali projects, it's around the 150K mark. So I think it's very interesting because I think about tying it back to Australia.
Yeah,
Where can you buy something for that?
exactly.
I'm waiting for an answer for you to be like, oh, you can buy it here, but it is simply quite impossible
It's not
for
there.
that price point.
No.
Unless it is simply a block of land in the middle of nowhere.
Or an old studio apartment or student accommodation.
Yeah,
That's
with the
pretty
fold
much-
down bed. Yeah.
All right, so let's talk about how technology has taken over and how it has changed the landscape of property investment. What have you been seeing for the past few years, and where do you see it going?
Well, personally, look, I always stay abreast of anything prop tech related. I love tech. I love the fact that an industry that's fairly traditional is now evolving.
Yeah.
And I think in the next few years, it's going to be really interesting with everything happening with AI, with everything happening in that space, just making people work smarter, not harder.
Yeah.
And a lot of businesses wanting to adapt. So there's a lot of cool stuff like in that space, which I haven't seen too many Aussie brands fully launch into it, but I am hearing whispers of some startups sort of doing some really cool things with AI. I think AI property management. So obviously property management is a very hands-on, a lot of written responses. And generally speaking, if a tenant has a rough question or like a very quick question, sometimes doing multiple of those for a property manager is quite makes them quite time poor. So stuff like that I think will save a lot of time, give people the right correct information, given it's set up correctly as well. So I always think with anything with AI, we can't be fully reliant on it 100% from day one. But the way it kind of works is you train it. And there's some really cool stuff. I know that I'm even exploring a sales support AI solution. So I think my confidence is still kind of like, look, it's got a long way to go. It doesn't replace a human. And it's just really exciting. But have you been doing much with the AI or anything?
No, we have. We are using AI a lot. As you rightly said, it's not going to remove a person. It's just increase your efficiency. It might take, the best example is the video team. If they were taking 2 weeks editing a particular video, there are tools out there using AI which you can do it in days. So that cut down so much of work, and then it's just a productivity increase, and it just helps businesses as a whole to scale, I would say. So it's not going to take out the human element of it, but it'll vastly improve the efficiency of businesses.
Yeah. And probably just on that, like separate to AI, I think there's just a lot of good technology emerging. And I wanted to talk actually about potentially one group called HTAG. It's a startup. They're essentially like a big data sourcing company. So think like CoreLogic, where a lot of people rely on RP data, CoreLogic to find out certain statistics. They've actually built their own IP. It's really cool. So they reference a 1 billion data points, and they basically can come up with their own custom score, which is based off their own algorithm as to how good this how good an area is to invest in. So I think like when we have people in the space really pushing forward with stuff like that, it's very exciting. The amount of research that manually goes into sourcing some of this data, like some of the things we talked about, like so infrastructure and vacancy rates, rental prices, house prices, what's happening next door. Like if we can simplify that, because that's hours of work, and hours of research. There's now solutions coming out that essentially at a click of a button, you can get that research.
And now investors they want education. And if we can get all that what they need in a suburb or a property at their fingertips quicker, then that will make life much easier. It's gone are the days where people watch news and make decisions. Now people want data, statistics to make a decision.
Definitely. And I think as well, it's a little bit on topic, but I think as well people nearly want things in email and they want text messages over call. So this is the one trend I'm seeing. People would rather that you text them a PDF link than even go to their email now. So start having stuff that's, I guess, more friendly on different platforms is key. I think we're really changing. Investors have so much available at their fingertips to do the research. So like you mentioned, you need to be quite quick with getting some of this data out. So it's really exciting with some of the things coming out in the current tech space.
Yeah. Interesting. Let's talk about the challenges, risks, which we can foresee for investors with all these emerging markets, and what should they be careful of? Any thoughts?
We are in a very interesting market.
Yeah.
I think there's actually, when you start to break down different challenges, there's a few at the moment. Obviously, with finance, I'd say that that's the number one sort of key challenge at the moment for a lot of people. Unfortunately, banks tightening their serviceability criteria, and obviously the rates being at an all-time high. It's really cutting a few people out of the market. It's making where I actually really feel for first-time property purchases, especially with this particular challenge, because you need a lot more capital and you need a lot more income to get into the market today. There was a recent article with 9 News, and I believe they said, I think it's 164,000 of a combined income is needed for people in the current market to get a loan without going into housing stress.
Wow.
And they define housing stress as, I believe it's 30%. I think it's expenditure going over 30% with finance. So they've got their own criteria. People can look it up if they want. But it's impressive because I think when you look at that sort of number, for someone that may be a single, it's going to be quite hard for them to get into the property market. And I do really feel for people going through their first property purchase, whether it's for investment or for themselves. I think finance is such a huge challenge at the moment. How are you navigating that at the moment?
No, I think it across the industry, especially locally, people are tight with the finance all throughout. And what I was thinking the other day was, when this happens, if it happens for a period of time, then people will stop thinking about investments because it's too hard. But again, what we need to educate them is the storms will go off. This is normal patterns, but interest rates won't stay up like that or forever. It's just a pattern. It's just a cycle, and we just have to be with it and weather the storm. But it's just a pattern and cycle. We just have to ride along.
I have seen some really interesting new kind of funds and schemes to kind of combat that. Specifically targeting kind of first homeowners, and there are a lot of different sort of shared equity schemes. So they can essentially, just to give you an example, fund guarantors 20%, obviously reduces the LMI, reducing the overall expenditure, but they do take a 20% stake in the property. There's other places where they're using, for example, rental income as track history that they can pay a loan to help them strengthen their position. So I think there is solutions coming out, because how long can we kind of stay in this holding pattern where it's really hard for first home buyers to get into the market? I guess is probably another solution. People are kind of looking at, if they don't have any cash, capital or equity, using their super as an alternative as well, if they have the funds there.
Now, super SMSF is a must do, I think, for a lot of people. Some people, again, scared of doing that, but then you can really double, triple your superannuation using property investments.
Never have I ever seen the market so strong with people wanting to do the SMSFs. I think in the past with a managed fund, what you usually get, I think it roughly sits around a 10 to 12% per annum, roughly, depending on who you're with, return. But I think people really want to take charge of their finances. in the new world at the moment. So it's really amazing because I think probably about 4 or 5 years ago, you wouldn't have seen this much activity in that space at all.
Yeah. So if you wrap up things, if you talk about what future outlooks as well as some strategies which people to adopt, we probably talked about it already, but so that we can end it on a good note. What strategies do you think people can adopt for the future outlook of all these markets?
Yeah, well, look, I might just sort of touch on a little bit about international and the local market. So I strongly believe that I think for the future, and as a bit of, I guess, my 2 cents, obviously speak to your financial advisor and all that sort of stuff and double check it out. But essentially, I feel that people who are capped out of the current market should explore potentially looking overseas as the first step in their kind of wealth creation journey to either, one, boost their income and get into the market and start to actually really get some investments on the board rather than shying away.
Yeah.
And then that sort of builds up a piece where you can sort of move into your second property and your third property. But I think the current market, as long as you do your research, Australia is a fairly safe bet.
Yeah.
The only thing I'd be cautious of, which I know we haven't spoken too much about, is there is NDIS where you have to be very, very careful with where you build and place these homes or purchase these homes. But that aside, generally speaking, as we've discussed, all estates have very strong outlooks at the moment, whether that's short-term or long-term. Definitely Brisbane, backed by the Olympics, is one to try to get into, in my opinion. Also, Perth, Adelaide, having a big boom at the moment and underpinned by the rental crisis as well, and people needing to get in homes. Melbourne, great long-term play.
Yeah.
I think that that's really going to start to grow in the next 6 to 12 months. But I guess for people listening, really sit down and work out how can you get into the market sooner rather than later. Like we said with Monopoly, my tip is try to get in, try to take all the proproperties as early as you can in the game, because the sooner you can get into property, you experience the growth.
Yeah.
Whether that's through your savings or combined income with a partner, whether you get a family member to guarantor you if you are at your early stages, whether you're looking at alternative methods, get into the market in some manner.
Yeah. Definitely. And also as a strategy, we talked about SMSF. If the borrowing is tight for yourself, again, if you have money in your super, you can use that to buy property, and that can be your retirement plan without you not knowing. And again, if you have equity, you might have your own home, but have been staying there for a long, long time. I'm sure you have a ton of equity there, which you can use towards an investment. Again, if the borrowing is tight, there's overseas options, interstate options. You just have to broaden your mind, and there is opportunity. Because if you have cash in your bank, that is trash. That's what the top investors do.
You're actually losing money, technically, if it's just sitting there due to inflation and everything else. So, yeah, I 100% echo your thoughts. I think if you can't actually get into the Australian market, just due to your financial situation or just to not qualifying, I wouldn't stress, because there's some great options abroad as well. And I strongly believe that, like the rest of the world, Australia will start to be more of a global investor. So in Europe, people don't just buy in London when they live in London, they actually look abroad. And I think we'll start to see that in Australia as well.
Absolutely. Lovely having you, Larissa. Thank you so much.
Thanks for having me. It's been a pleasure.
Thank you.
Monopoly by Grit.